Good morning, friends. Welcome to Share Market and Trading Investment Training. This lesson is one where we are going to kicking things off a word of opportunity and discuss about investment and trading. Taking a quick look at the objectives that we would like to accomplish at the end of this session is the awareness of why we want to learn how to invest in the market in the first place. Then we will be getting into learning the difference between real world trading. Then we'll be getting into developing a clear understanding of a market basics. You cannot participate in the marketplace unless you have a confidence in understanding the basics. Because understanding how to define value in a stock pick or read the analysis on a technical side for a specific stock is one thing, and it's very important part of a decision making process. But understanding what goes on the behind the scene and what actually makes prices fluctuate, that makes the underlying value of a stock increase in value or decrease in a value vitally important as well. Without further ado, let's get into core topic number one. That is, why are you here? What do you want to achieve in the market? Or what brought you towards doing this course in the first place? Well, let's look at a few options. Maybe you want to make money long term with some short term or a part time investing decisions. Maybe you are just someone who wants to learn the market and become an active and a professional investor. Maybe you want to improve your current trading and investing because you are not currently successful in the systems that you are using. Maybe you also want to just find an active career path into the financial trading and investment sector. If you fall into one of those four categories, welcome to the course. This is going to be an amazing journey for you. I can't wait to get fully submerged in all the amazing content that we had laid out for you. Let's continue. All right, it's time to get stuck into core topic number two, and that's going to be trading and investing. I love this whole portrait of Ray Dalio. A part of what you can do as a part of your homework at the end of this lesson is to do some research about who is Ray Dalio. Ray Dalio is about a wonderful, person and is an investor. So just do some more research. I'm sure you will be very surprised by the information you find. One of the best investor to that in history. That's for sure. All right, so let's look at the difference between trading and investing. So both involve seeking profit from the markets, but which side should you be on? That's the question that many people ask, especially getting into the marketplace for the first time. Let's define the two. I'm sure you will be have a little bit more clarity on how we look at trading versus investing. Starting off with investing, as I'm sure you already understand, investing is the action of buying for a long-term gains. It's about understanding how to define the value in the stock pick and then making a buying decision on a certain amount of shares that you can hold on, and the underlying value of those shares increase the value over time. Then so does the value of the amount of shares that you hold, to which then you can decide to sell those shares for a profit or maybe continue holding on our longer term gains. When we are looking at investing, we are considering the future value of what it is we are discreting the value of what we're looking at, what the future price could potentially be, and looking to maybe gain the potential on the rise in price or the rise in the value or specific stock pick so that we can sell at a specific target, right? Investing generally relies on fundamental analysis. It's not only based on what's going on in a micro scale in a company. So their company reports, who their CEOs are, who their board directors are, what their cash flow, their external influences that could affect the performance of that company. We need to look at all these fundamental influences in order to make a proper investment decision. You need a long-term growth opportunity in order to see any financial gain from whatever it is that you are investing in. You must own the instruments being invested. When you are investing into a company, for instance, you are essentially buying a little bit of that company itself. You have to own the share in order to benefit from a future valuation where you can sell at a later point in the time because you don't own it, then you have nothing to sell. As with anything in the financial market, investing is going to sensitive to need. We can always see price fluctuations occur depending on the fundamental news sector, which is studying fundamental analysis is going to be such a key element to our success as a budding investors. Let's have a quick look at how we define trading and how it differentiates from investing. Trading is the art of action or buying or selling for a short-term profit gain. We talk short terms, we are talking on a weekly or even monthly basis or even sometimes day to day. We can make money as a trader in the both upward and downward movements. And it's generally based on the fact that you're trading contract for differences. When it comes down the timing of our purchasing directions based on how many shares we would like to include in our portfolio, then we are going to be relying on a technical analysis because timing is absolutely crucial in any financial market instrument or trading approach. We need to make sure that not only are we determining the value correctly, but that we are buying a certain amount of shares to add our portfolio at the perfect time. Fundamental analysis will help us determine the value, and technical analysis will help us define the timing behind our purchasing decision. In trading, you don't need to own the instrument in order to trade it. Generally, because if the CFD, a contract for a differences, you are putting up a portion of your own account in order to speculate the future price movement of what it is that you are looking at. Let's say you are looking at the current price or current market. For example, you are looking at a euro USD. You could determine if euro is going to go up or down based on your own speculative views and your strategy that you are using. If you are right, then you will able to benefit. If you make buying decision and the price of euro goes against USD, then you will be right and you will gain a certain portion of a capital from the market based on how much risk you added on that trade. Or inversely, if the market goes down and you have made a selling decision before that happened, then you will be right to be a certain degree and also be able to gain a certain percentage based on how much risk you have made or applied to that certain trade. Yes, trading is also very sensitive to noise. If you are looking at the charting behavior and there is some news that comes out as a huge fundamental influences, then we will see the price fluctuations on the chart that we are looking at. Let me help you to understand that the purpose of the financial market and the company listing their shares on a stock exchange is for them to mainly raise their capital. That's their primary objective so that people can buy into their company and buy into their future valuation and their future growth and be a part of that company's growth, essentially, right. Another big reason that a company will list their shares on the stock market is so that they can transfer risk. They list their shares on a stock exchange in order to get investors interested and raise the capital for them to use, actually broaden into different opportunities and expand their business as well. Now, company listing their shares on a stock exchange is a great way for them to discover the value of that company. That's through price discovery or shares being listed. The more people who buy shares, the more money the company essentially makes. And the higher the price of the shares inevitably come. Then there is a transfer of a liquidity and international trade as well. This is just a very brief overview as to why companies list their shares on a stock exchange to create some interest from investors to help benefit the company's growth and overall development as well. Warren Buffett famously said, "Price is what you pay, value is what you get." In order to participate in the stock market successfully, you must be able to understand what you can invest in, and you also need to understand how you analyze and when do you actually trade, and then how do you actually buy and sell, how do you find the value, determine the right time is, and then pull the trigger on a buying decision. So you need to understand that the stock cost to purchase is not necessarily a true representation of the stock's true value. So you need to understand that don't judge a book by its cover. If you see Mark Zuckerberg walking on the side of the road, you definitely couldn't assume he was the billionaire who creates Facebook. You would assume just by the name Mark Zuckerberg, someone he probably wears suit and goes to very important meeting and spend most of his time sitting around boarding in table. So he's very far from average billionaire. And for this reason, we should not judge book by cover. Don't judge a stock by its share price. A stock price says little about that stock value. Current price does not indicate whether that stock is heading higher or lower in the future. Key points to remember regarding price and value. A stock price indicates its current value to buyers and sellers. Intrinsic value may be higher or lower. And finally, the successful investing is the art of identifying stocks that are currently undervalued by the market. Thank you everyone for watching this video. If you like my training video, then please subscribe my channel and click on the like button and click on the bell button so that you will get the notification for all of my training videos. Thank you for watching.